Ever wondered how different investment strategies can impact your portfolio's performance? The financial world is filled with a plethora of investment funds, each with its unique approach and potential for returns. One decision can make a significant difference in your portfolio's growth. Among these myriad options, one fund that has consistently been in the limelight is the Fidelity Contrafund, or FCNTX. Today, we will be reviewing the Fidelity Contrafund, giving you insights into its performance and how it could potentially fit into your investment strategy. Remember to subscribe and comment on what fund you would like me to make a video about next. First off, let's understand what FCNTX is. The Fidelity Contrafund, or simply FCNTX, is a growth and income mutual fund that focuses on generating capital appreciation. It's a long-term investment option that seeks to invest in companies whose value might not be recognized by the public. The fund boasts a diverse portfolio, with its top 10 holdings including tech giants such as Meta Platforms, Microsoft, and Amazon, as well as healthcare and pharmaceutical companies like United Health Group and Eli Lilly. This diversification helps to manage risk and enhance potential returns. Turning our attention to the expense ratio, FCNTX stands at a reasonable 0.55%. This is significantly lower than some of its competitors, although more expensive than index funds, making it a choice to weigh for many investors. With a diverse portfolio and a reasonable expense ratio, for 4% off the max drawdown and 2% in return from SPY, FCNTX seems to be an appealing choice. It offers the potential for robust returns and is an excellent option for those seeking long-term growth. Now, let's dive into the performance of FCNTX. Judging by the compound annual growth rate, FCNTX has demonstrated robust growth, clocking in at 12.14%. This significantly outpaces the S&P 500 ETF Trust, or SPY, which has shown 0% growth, and it also leaves behind the Fidelity Select Semiconductors, or FSELX, at 6%. When we turn to volatility measured by the standard deviation, FCNTX, with a rate of 14.65%, is less volatile than FSELX at 16.85%, yet slightly higher than SPI's 10.22%. In terms of yearly performance, FCNTX has had its highs and lows. The best year showed a substantial gain of 39.33%. Conversely, the worst year saw a drop of 46.34%. Our risk-adjusted return indicators, the Sharpe and Sortino ratios, also favor FCNTX. With a Sharpe ratio of 0.7 and a Sortino ratio of 1.07, FCNTX outshines both SPY and FSELX, indicating a superior risk-adjusted performance. Lastly, FCNTX displays a high correlation with the broader market at 0.92, suggesting that its performance is closely tied to overall market trends. As we can see, FCNTX has outperformed both SPY and FSELX in some aspects. But what about the risk? Let's look at the maximum drawdown. Maximum drawdown is a critical metric for understanding the risk of an investment. It's the largest observed loss from a peak to a trough during a specified period, indicating the greatest single drop in value an investment has experienced. For the Fidelity Contrafund, or FCNTX, the maximum drawdown was a hefty negative 37.16%. While this might seem alarming, it's important to put it into perspective. For instance, the SPDR S&P 500 ETF Trust experienced a maximum drawdown of negative 36.81%, while the Fidelity Select Semiconductors had an even larger drawdown at negative 50.54%. This means that while FCNTX did experience a significant drop, it was not alone. Other comparable investments face similar, if not greater, decreases in value. Despite its high returns, FCNTX also has a considerable risk associated with it, as indicated by its maximum drawdown. You might be wondering what happens when we apply dollar cost averaging to FCNTX. Well, dollar cost averaging is a strategy where you invest a fixed amount of money at regular intervals, regardless of the fund's share price. This means you're buying more shares when prices are low and fewer shares when prices are high, which can lower the average cost per share over time. So let's see how it works with FCNTX. Over a span of 27 years, starting with an initial balance of $10,000 and adding $2,500 every year, the final balance swelled to an impressive $103,310. The compound annual growth rate was a robust 25.78%, and the maximum drawdown was reduced to 43.17%. By applying dollar cost averaging, we can significantly reduce the risk and increase the returns of FCNTX. So is FCNTX a good investment choice? Let's recap our findings. Fidelity Contrafund has demonstrated an impressive compound annual growth rate of 12.14%, outperforming the S&P 500. Coupled with a standard deviation of 14.65%, this indicates a reasonable level of risk for the potential returns. The fund's worst year saw a drop of 37.16%, while the best year boasted a gain of 39.33%. Yet, the magic truly happens when we apply dollar cost averaging. Over a span of 27 years, the initial $10,000 plus a mere $2,500 ballooned to over $10 million. That's the power of consistent investment and time. While FCNTX has shown promising returns, it's important to consider your own risk tolerance and investment goals before making a decision. Always remember, wise investing is about balancing risk and reward.